topic on agriculture, agro-based and healthcare industries by CA Vishal Agarwal, and followed by banking, finance, and insurance sector, which will be taken by our CA Janak Bhai. So,
ऑडियो कर दिया वो वाला ऑडियो
welcome
थोड़ा
all,
सा
and
रिपीट
looking forward for deliberations and detailed discussions in this regard. So, I'll request Utkarsh ji to formally introduce our esteemed speaker today and take the proceedings forward.
Thank you, Shravan bhai. Good evening, everyone. A very, very warm welcome to all of you. Let us begin with our speaker's introduction. CA Vikas sir is a seasoned tax professional, a lawyer, CA, CS, and CMA by qualification. Sir started his career in 2006 with PwC in tax advisory and litigation, and after working with firms like Deloitte, EY, Baker Tilly India, Tata Motors, and Polycap at various key positions, he left the corporate world and co-founded Empathetic Consulting. Sir is also a member of the Indirect Tax Committee of the ICAI Ahmedabad chapter and is a regular speaker at various forums, including CPE Committee of the ICAI, XLRI, etc. His articles are regularly published in Divya Bhaskar and various chambers publications. Sir is also a member of Mensa International, which is world's largest and oldest haiku society. Sir, we heartily welcome you, and over to you, sir. Thank you so much, sir.
Thank you. Thank you very much, CGPI team, for letting me this opportunity, sharing this opportunity with me. I have been a speaker at various forums, but for at CGPI, I think it's my first one. So no, it's second one. I had shared one session earlier. So thank you once again. So I'm starting with this today's session. Uh, I'm speaking on healthcare sector, agriculture and agro-based sectors. So, guys, I have largely tried to keep focus on the implications because rate change, it's okay. I mean, rate change is a very generic information based on HSN and description. We all are having access to this information nowadays. We are having Excus, Lockrux, and various database also. So, I've largely tried to keep focus on what are the implication of these rate changes. So, I'll start with healthcare sector. In healthcare sector, what are the major industries? See, healthcare, bolne ko to it's a one word healthcare, but there are many industries in healthcare sector. First, like healthcare insurance, health insurance, diagnostic lab services, hospital, medical tourism, pharma manufacturing, ethical marketing, again nutraceutical manufacturing, ethical marketing, medical devices and equipments manufacturing, clinical research. So there are many industries. So out of that, pharma, nutraceutical, and manufacturing sector, these are very directly affected by this GST 2.0. And of course, insurance industry, it also impacted. So these all are directly affected by the GST 2.0 in a positive manner. Let us start with the insurance one. It is a very simple one. Looks like simple. Rate cut is very simple. It's 18 to nil. 18% से zero ही कर दिया है government ने. Now, I mean, there are people who are telling that bringing it to nil rate will have a further adverse effect because इसका जो input tax credit चला जाएगा तो cost insurance के बढ़ जाएंगे. So let us see what are the impact. So of course जो आपकी existing policy है उसमें तो कोई रेट सीधे सीधे आपको जीएसटी का रेट कट मिलेगा 18% का. देयर कैन नॉट बी एनी इम्पैक्ट ऑन दैट. बट हाँ, we are here right now here discussing not the end user, we are discussing the insurance sector. So what is the impact on the new policy to be sold by them? So of course there is a ITC loss, but then before going into the impact of that, mind you, if suppose this GST rate was not brought down to nil but brought down to 5%, in that case also it doesn't make any change. In that case 5% GST cost would have been there. Now suppose their input tax credit cost is 7%. It's not that input insurance industry में इतना input tax नहीं होता है. Let us assume कि अगर input tax credit rate is 7% and GST rate would have been 5%. In that case also insurance industry was not going to subsume that additional 2% जो उनके books में सिर्फ assume accumulate होके पड़ा रहेगा. They were going to add it to premium. So likewise now if the rate is nil also, then also that 7% is going to be loaded on the cost. So I don't think that bringing it to nil rate will further deteriorate it or put it to more worse position compared to 5 or 12% rate. So of course, there are input services for insurance sector, insurance and reinsurance services. What are that? These are like all external input services. Of course, I'm talking about external input services because those services which are procured, not procured from external sources, their GST is not involved. So, like suppose if you are hiring someone, let's say for example, customer care service. If the entire customer care service is outsourced to external sources, then the service provider providing services will charge GST. But if insurance company is hiring people directly on their roles and providing the customer care service through them, then there is no scope of GST. So that's why the GST impact is there on external input services only. Now, what are the major input services, major external services? Okay. So like underwriting, risk assessment. So risk assessment, what is risk assessment? Whenever if you take any policy, you see some external person come to your place for some verification. Sometimes TPA for whatever claim processing. For claim processing nowadays, almost all companies are using TPA services. Customer care services. So, like if you have any concern with respect to any of your health policy, certainly you are going to call them. So, these all services are handled by customer care department. So, information technology, which is a major cost to them, legal and professional services. But my friends, what may be the share of the all these expenses? The overall cost of insurance sector, overall input tax cost of the insurance sector is not much. The gross margin is high because they are actually selling risk. So and on an estimation, the GST amount on all this cost out, I mean, on all the cost incurred by an insurance sector, insurance company, any insurance company, out of that also, the amount which is actually services which are actually taken from external sources and GST on that amount uh, is not more than 2 to 3% on an estimation. So thus, even if that 2-3% is also taken into account, then also there is a estimated reduction of 14 to 16% in policy premiums. But yes, again coming back from insurance company, what are the additional compliances? See, these whatever we discuss right now is from consumer perspective and pricing perspective. What are the additional compliances for insurance company? There is one simple question: whether 18(4) triggers. There are mixed views of people. So without going into more details on 18.4, there is one practical difficulty. Let's say if 18.4 triggers, then also there is one practical difficulty, and that is there is one expression, wholly exempt, is used in 18.4. Now, this wholly exempt has not been defined in the GST law. Wholly exempt can be interpreted in a sense as if the particular goods or service has been wholly exempt through tariff or unconditionally exempt, or otherwise, the expression wholly exempt can also be interpreted in a sense that all the goods and services supplied by that person are exempt. So it is a very contextual expression. There is no clear interpretation of this. This expression has to be interpreted in the sense it has been used, in the context it has been used. And when we come to 18.4, the context must be that whether all the goods or services are exempt or not. In case of general insurance companies, of course, health insurance is issued by general insurance companies. So in case of general insurance companies, it is not only life insurance which they are selling. They are selling motor insurance, commercial insurance, property insurance, many kind of product. General insurance is a very wide terminology. So like if the health insurance is a small part of it, or it may be a significant part, but it is a very small part of the entire general insurance business. Thus, it is not the case that all the general insurance services are fully exempt. The general insurance companies have got a partial exemption, or can say a complete exemption, unconditional exemption with respect to only one product they are providing. So thus, in my view, there is no scope of 18.4 because there are other taxable services also. So available ITC is related to both taxable and now exempted services. So there is neither any law nor formula for such segregation. So the entire ITC which the insurance company is taking, or rather already taken. Right now we are talking about the ITC already in books of accounts. There is no formula to segregate that ITC balance, that accumulated balance as on date, into that how much amount is related to the activity which is now taxable and how much amount is related to goods or activity which is now exempt. So in my view, it is not possible to apply section 18.4 and rule 44, but definitely there is an implication of IT reversal as per rule section 17 read with rule 42 and rule 43. So when it comes to rule 42, the implication would be only prospective. There is no implication on past credit availed by the company. But yes, when it comes to rule 43, there would be implication on past ITC also. What I mean is, whatever ITC has been availed on capital goods in the last 5 years, that will be exposed to proportionate reversal under rule 43 on considering the life of that capital goods as 60 months, 5 years. So which means the formula prescribed under rule 43 will apply to ITC availed in past also. So thereafter, this was healthcare services. Next is diagnostic lab. I think diagnostic services is one of the service wherein there is a significant GST reduction, and it is very difficult to say that to measure, as you might be aware that government has mandated that whatever GST benefit you are getting, you have to pass on to your consumer. Now, when it comes to diagnostics labs and services, it is very difficult to measure on these kind of services that what is the actual benefit to the consumer. Why I am telling this? Let us see. So first, there is a GST cut on medical device and equipments. What is the biggest cost for a diagnostic lab? It is not the operational cost or the day in day out cost. Their major cost is the depreciation cost, their medical equipments. So with rest for the existing diagnostic lab, there is no benefit with out of this provision. But yes, for the new labs to be set up, this is a very use benefit. 13% reduction in machinery. So suppose आपका cost कल 100 rupees था, so 100 से directly came down to 88 now. So the setup cost for a diagnostic lab has came down significantly, and it will certainly give a competitive advantage to newly set up lab over the existing ones. So because if any lab has, say, let's say someone has set up a lab just 2 months back, and the cost was, say, if 1 crore, the same lab can be set up now today on an estimated cost of around 87 to 88 lakhs. Now, GST on diagnostic kits and consumables. Of course, it's not that these are not significant. These are regular costs. These are significant costs. But compared to the amount of test charges recovered by a diagnostic lab, these are not significant. The significant cost is, of course, the depreciation cost, or the which is it pertains to the cost of capital goods. But yes, there is a significant reduction in OPEX cost, operational cost also, because all these diagnostic case, consumable, these all are the GST on these have reduced to 12% to 5%. So the effective reduction in cost is 6.25%. Now, coming to GST on diagnostic service. Now, this is one sector where not only input services, inputs and capital goods, but rate on output services has also been decreased. There is no other sector जहाँ हर चीज पे रेट कट हुआ है. So यहाँ आउटपुट सर्विस पे भी रेट कट है, इनपुट सर्विसेज पे भी रेट कट है, कैपेक्स पे भी रेट कट है. So there is a massive benefit for diagnostic labs. So now so let's say if a diagnostic lab was charging 112 for any service earlier, then without even giving effect to of GST reduction on input and input services, that cost today become 105 for end user. And 105 में भी जो input और input service पे जो GST reduce हुआ है, उसका जो benefit है, जो though it is a cash flow benefit, but still if that factoring is yet to be considered. So reduced capital cost, operational cost of course it's not 6.25 as I computed above, because it was just it was the saving in cash flow. So cash flow benefit जो बचा उसके ऊपर जो भी interest cost जो थोड़ा बहुत आता है, that is the saving in operational services, operational cost. So anyways, taking all together, there is a significant reduction for end user, especially when the GST rate cut on medical device and equipment is considered. And of course, let me throw some light on this. Earlier, what was happening, not earlier, now also, there was not much scope of adjustment of ITC on medical device for diagnostic lab, because 18% पे करके आप जब मशीनरी लाते हो तो आपके पास you have massive amount of input tax credit in the books of accounts. So now and the output services were not very much. I mean, the GST on output services was not very much. So it was a challenge using that amount. So anyway, it was a cost. Now that everything is in 5% bracket, first of all, the GST amount paid at the time of setup on this medical device and equipment has already significantly came down. And then, of course, like earlier, it could be used against payment of GST in a very slow manner. That can be adjusted now also. But हाँ, आपका 13% upfront जो cost बच जा रहा है, उसको cost saving ही बोला जाएगा, because this ITC was not practically earlier usable. 18% the scope of using it against the output services, because it was anyway taxable at 12%. Even if you consider the 12% on margin, still 18% was so big amount that it was not usable in even 2-3 years. This is what I'm sharing, my experience as per few of our clients who are into this business. So after diagnostic lab, next is hospitals. Hospital, what has happened in hospital? GST cut on medicine device, same as like diagnostic labs. So one more additional advantage for hospitals is GST rate cut on ambulance from 28% to 18%. I am of view that government should have made this also 5%, uh, like other goods and services, because anyway ambulance is not a motor vehicle, so government should not have seen it from that perspective. But anyway, this 10% reduction is also a welcome move. Then GST on hospital services is already nil. So that way, whatever rate is GST rate is reduced is a direct saving, is a cost saving for any hospital. So one can say that setup cost for hospital has also came down. So even in hospital, day in day out, for an existing hospital also, they keep on requiring new medical devices and equipments, on which GST rate has reduced from 18% to 5%, which is a massive rate cut. Directly आपका almost 12% का cost saving, 13% का cost saving हो रहा है. But yes, talking from perspective of that, if there is any additional compliance on a hospital, so like we discussed in case of insurance services, no, there is no such additional requirement, additional compliance, because hospital पहले भी नील था, आज भी नील है. हॉस्पिटल को पहले भी कोई इनपुट टैक्स रेट नहीं मिलती थी, आज भी नहीं मिलती थी. So reduce capital cost and operational cost, both are direct benefit for hospitals. If you are in a hospital, if your client is in hospital industry, you may seek you may file a representation to the government that GST on ambulance may also be brought down to 5%. But anyway, 10% cost reduction is also a significant cost reduction. Going further, benefit to end user is this GST, whatever benefit, whatever cost benefit hospital are getting, they have to pass on to the consumer. But the challenge is that who will measure it, how it is going to be measured. The biggest challenge is that hospitals are not even registered under GST. So, and this anti-profiteering law, the sunset clause of anti-profiteering law has already crossed. It is already a closed chapter, can say, one can say. So the biggest challenge is how to monitor that hospitals are passing on the benefit or not. And the biggest question, how GST department will ensure, how government will ask them or make an inquiry. Here I can refer the regulations imposed on stents cost or artificial organs. Everyone knows that what is going on in this sector, and the part of the cost has been shifted in the professional charges. So it will be very difficult for anyone to review or determine that whether this cost has been passed on to the consumer or not. But yes, out of competition, it is expected that some portion of this GST benefit is going to be going to the pockets of the end user. So next is other issues of hospital. Yeah, there are some other issues of hospital, like government has provided relaxation from the cost of equipment, surgical equipments, machineries, ambulance. But then there are other points also. Many hospitals are running on lease premises, and of course हॉस्पिटल्स की जो रेंट होते हैं वो हॉस्पिटल कोई छोटी मोटी प्रीमाइसेस तो होती नहीं है. So mostly their owners, property owners are mostly registered because rent is more than 20 lakhs and charging 18% GST. So this 18% is security services are generally outsourced by hospitals. Many premium hospitals outsource their housekeeping services also. On all these services, 18% GST is an additional cost for hospitals. So these are some other issues which could also have been addressed. But yes, anyways, the benefit provided by government is already enormous. And considering that, the biggest challenge is how to ensure, how government is going to ensure that these benefits are actually passed on to end user. This one can say that whatever benefit are provided are enough, and if this small GST on this small expenditure like ambulance, rent, security service, housekeeping, 18% GST, if at all any hospital is paying 18% GST on it, it may not be a significant amount compared to the volume and receipts of a hospital. So of course, this 18% is a cost to hospital industry. So after hospital, let us move to pharma sector. Pharma sector, there is a rate reduction on significant goods and services. So first of all, there is a welcome move that there are 33 life-saving drugs on which rate has been directly brought down from 12% to zero. And some life-saving drugs which are to be used for treatment of cancer, severe chronic diseases, and some rare diseases have been brought down from 5% to nil. Apart from these two categories, almost all the goods and services are to be used by a pharma sector has been brought down from 12 or 18% to 5%. So it is anticipated that pharma sector may not have be falling under the or I can say may not have to seek the refund under inverted duty structure anymore, because almost all the goods and services, so anyway there is no refund on services, so almost all goods are now falling under 5%, like all the drugs, medicaments, formulations, uh, even medications including Ayurvedic, Unani, Siddha, homeopathic and biochemic system medicaments, animal blood prepared for therapeutic glands and other organs for I'm sorry, one correction. This is, we are talking about the pharma in products, not the inputs used by pharma sector. So I take my statement back regarding the refund on this inverted duty structure. That's a different thing. So medical devices and other supplies, that also came down from 12% to 5%. This includes diagnostic kits, BP glucometer, massage apparatus, all kind of appliances, medical devices, other supplies, instrument, apparatus for medical, surgical, dental, and veterinary uses, thermometers. All these goods, they all have been brought down from 12 or 18% to 5% only. Even medicaments under Ayurvedic, Unani, Siddha, homeopathic, or biochemic system of medicaments, which are altogether different from what we say this allopathic medical system, are also brought down from 12% to 5%, which is a very welcome move. Now, what is the effect of this? What is the effect of this? Let us see. So the effect of this is that there are additional compliances. See, of course, when it comes to hello, anyone having any question? Some noise there. Okay, so one question arises that when all these products have been brought down to 5%, what will happen to ITC accumulation? So my friends, pharma sector is already under inverted duty structure. So they will have to keep claiming that refund. There is one good news that earlier in inverted duty structure, there were delays in getting refund in sometimes, but now thankfully this provisional refund system, that will not only expedite the entire refund process, but then the cash flow benefit will also be there, because 90% of the refund amount will be received almost in within a week's time, if not 3 working days. And let me tell you, earlier the kind of delay earlier happening in inverted duty refunds is not expected to happen now, because when already a significant amount, 90% provisional refund is already granted, then there is no reason for officers to delay. I hope you understand what I'm trying to say. But anyways, it's a welcome move. So, but then there is one thing, since few this life-saving drugs, those have been shifted to nil rated. What is there any additional compliance? Yes, there are additional compliance. Let us see what. So first is, as I already mentioned, that pharma is already under inverted duty structure. Second is again section 18(4) and rule 44. Okay. In my view, if any sector is only manufacturing nil rated goods, so like these life saving drugs, and they are not manufacturing any other taxable goods, then yes, section 18(4) का implication आएगा, and the reversal will be there as per section 18(4), which says that आपका जो भी goods है, जो भी ITC accumulated है, almost lapse हो जाता है. For capital goods, there is a formula prescribed. So if suppose you have already used the ITC, then as per that formula, as per which is to be followed up to the period of 60 months from the date when ITC was already originally taken. So जो भी amount as per rule 44 में जो prescribe की है formula में, sorry, that amount will have to be paid as a liability if ITC balance is already utilized in the earlier month. But if any manufacturer is manufacturing both nil rated and now 5% goods taxable at 5% rate, then practically 18(4) can't be applied. Then in that case, rule 17, rule 42, so section 17 and rule 42, 43 will come into the picture, and ITC reversal will have to be done every month. Friends, I think this this additional compliance was already known to you. What is more important is, one more thing, reversal under rule 43, as I mentioned in case of insurance industry, same applies here also. If ITC on any capital goods has been taken in last 5 years, then their monthly then their proportionate monthly reversal is yet pending, and then in that case, to the extent ITC reversal will have to be done in proportion of exempted turnover to the total turnover, and that reversal will be done on the amount which is 1/60th of the total ITC availed originally. This formula is very common. You all know already this. So what is more important? The more important is pharma manufacturers, they are they are bound to pass on the cost to the customer. Whatever benefit, GST benefit is there, they are bound to pass on to the customer. But how? Let us see. So one is rate reduction must be passed on to the customer. Price increase can't exceed. See, there is no increase. There is no GST rate increase. So this is a very this is not a I say, uh, relevant one, but yes, this is written there in the circular. So suppose when we say that the revised price must be as actually as per the GST rate reduction, what is mean? What does it mean? So let us look at an example. If suppose if the MRP of a goods was 100 earlier, पहले 100 का MRP था जिसमें 12% GST शामिल था, then we will do a back calculation. Back calculation means 100 upon 100 plus 12% means 100 upon 112. So the price comes to 89.29. Just give me a moment. So 89.29 becomes the cost. Now, what would be the new price with the 5% GST rate? So 12% has been reduced to 5%. So now the old price was 89.29 without GST. We will add 5% GST on same, and the new price will be 93.75. Likewise, if the GSTs would have been made 18%, there is no such case, but because just for your reference, the same 18% would have to be added to 89.29, which is the old price. Thus, the new price would have been 105.36. So now, this since the 5% is the new rate, the revised price will be 93.75. चलो ये मैथमेटिकली कैलकुलेट तो हो गया, बट व्हाट इज टू बी डन, हाउ टू पास ऑन? So, okay. Initially, government has asked for dual MRP, circular dated 9th of September, जिसमें गवर्नमेंट ने ड्यूअल एमआरपी की बात की थी. बट देन लेटर ऑन द गवर्नमेंट रियलाइज द हार्डशिप कि बिकॉज सी फर्स्ट ऑफ ऑल द इन्वेंट्री इज विथ मैन्युफैक्चरर और इंपोर्टर ऑल्सो. Apart from manufacturer, what about the stock, which is with the stockist, dealer, distributor, and retailer? How to ensure that price reduction is implemented on those goods? So यहाँ मुझे ऐसा लगता है कि हार्डशिप से ज्यादा गवर्नमेंट ने ये रियलाइज किया होगा कि इन स्पाइट ऑफ हैविंग अ सिस्टम ऑफ डुअल एमआरपी, उन गुड्स पे एमआरपी रिवाइज्ड एमआरपी का स्टिकर नहीं लगाया जा सकता है. तो देयर विल बी टू काइंड ऑफ गुड्स अवेलेबल इन द मार्केट, जिसपे दो एमआरपी होगी और जिसपे एक सिंगल एमआरपी होगी. सो कंसीडरिंग दिस प्रैक्टिकल डिफिकल्टी, द गवर्नमेंट रिलैक्स फ्रॉम प्रिंटिंग न्यू एमआरपी और affixing new sticker. So what is now required, that product? But yes, let me tell you, if any manufacturer is willing to put the new MRP on its product, there is no restriction. Manufacturer can put, but not the dealer, distributor, or stockist. So in that case, if that manufacturer is putting dual MRP on any product, then for him it will become difficult, because then in that case that manufacturer will bring all the goods back to their factory from stockist, dealer, distributor, retailer, and then put the sticker or affix the new MRP and then resend. Now when I am telling this, आपके दिमाग में ये आ रहा होगा कि स्टॉकिस्ट से या डीलर डिस्ट्रीब्यूटर से सामान मंगवा करके एमआरपी लगाने की जरूरत क्यों है? मैन्युफैक्चरर सिर्फ उसके पास जो स्टॉक है उसमें भी नया एमआरपी फिक्स कर सकता है. सर वो इसलिए जरूरत है कि जब आप खुद अपने पास जो इन्वेंट्री पड़ी है उसमें नया एमआरपी लगा देंगे, देन देयर विल बी टू काइंड ऑफ कमोडिटीज इन द मार्केट, एंड देयर इज अ रिस्क कि that the product with higher MRP may not be cleared by the stockist or distributor or dealer. So anyways, that is a, but this I'm telling as per practical difficulty. So now coming back, what is required is that product with rate chains are identified. तो सबसे पहले तो आपको वो प्रोडक्ट आइडेंटिफाई करना है जिस पे रेट चेंज हुआ है. व्हाई? बिकॉज देयर आर प्रोडक्ट्स विच वे आर ऑलरेडी अंडर 5%, उनमें कोई चेंजेस नहीं है. So you have to identify the products which were earlier under 13% and now under 5%. This applies to nutraceutical sectors also. New MRP is computed exactly as per GST rate change. So just now I shared one example of 100 rupees with you. In the same manner, you'll have to back calculate the old price, apply the new GST rate of 5% and compute the new price. Now once you have this new price, you'll have to prepare a table with commodity name, description and its old and revised prices. And you'll have to prepare a circular for all your trade partners. Who are the trade partners? Definitely your stockist, your dealer, your distributor, your retailers, they all are your trade partner. You'll have to prepare a circular that on these commodities, earlier this was the old MRP, this is the revised MRP, and you will have to also indicate in that circular very clearly that they are bound to pass on the benefit to the consumer with reference to the circular dated 18/9/2025. Now, this circular must be sent to all the trade partners through normal communication channel. Through normal communication channel is not written in the circular. This I am telling as per my experience. Why through normal communication channel? Whenever you are communicating with your partner with respect to any scheme or any discount, then there is a communication channel which is followed by them. Now, for a faster and effective communication, the same communication channel must also be used, and in addition, either a speed post or a courier or an email must also be sent to them with the strict guidelines that the good must be sold, not goods cannot be sold exceeding the new MRPs or the new prices. So now one more requirement is that a copy of that circular is to be endorsed to Director of Legal Metrology also. And it is recommended that when a copy of circular is sent, then it is also intimated to the Director of Legal Metrology that compliance to circular dated 18/9/2025 has been done and how it is done, and an acknowledgement has been taken from the Director of Legal Metrology. Why I am telling this, that let's say suppose tomorrow if there comes up and if they say that you have not taken enough measures to pass on the communication to the trade partners, then in that case you will have some substance in your hand that you had intimated to Director of Legal Metrology, and if there was any insufficiency, then the communication should have been made then and that time, so that necessary action could have been taken instead of blaming the blaming the taxpayer at a subsequent point of time. Reforms for agricultural sector. ये इसका चार्जर लाओ ना, बैटरी डाउन हो रही है अंदर. हाँ बोलो. Okay, so going forward, agricultural sector. Agricultural sector is a very big sector in India, and there are enormous tax benefits in this sector also. The biggest challenge with the agricultural sector is that most of the produce are already exempted, and the people producing are not further processing these goods. So because of that reason, ITC chain breaks. They are not able to use the ITC, and this entire GST paid by them becomes a cost to the process. So if we see from that perspective, then cost reduction tractor in this tire tubes, hydraulic pumps or other parts of the tractor, sprinkler, irrigation system, all agricultural machineries like threshers, harvesters, compost machines, or any other machine used for soil preparation, cultivation, all these all GST paid on all these machines have significantly came down from 12 or 18% to 5%. Now, when in the system, in the agricultural system, when this entire GST amount is going to be a cost for the for a agriculturalist, then in that case, no doubt this is then no doubt this reduction in GST rate is reduction for their investment, reduction in the cost. Press करो जोर से. Biopesticides, menthol, all these goods which are used in the agricultural process, on which GST has been reduced from 12% to 5%, is a welcome move. Give me a second. Okay. Next is, what are the direct benefits? So the direct benefit is low investment. The tractors, whatever we have seen, tires, first of all, machines, these all are capital investment for any agriculturalist, which is a significant amount of investment. Now that the GST has reduced on all these goods, then the investment for them has significantly came down. Apart from that, operational costs like tires, uh, sprinklers, irrigation system, these all maintenance parts of tractors which are used in maintenance, this biopesticides, these all are operational cost on which also GST has came down. So like this, for any agriculturalist where the purchasing power has increased, there is also a possibility of higher level of mechanization. Agriculturalist who could afford let's say a agriculturalist who can afford 1 lakh rupees. So earlier in 1 lakh rupees, 1 lakh rupees compared to a period prior to 22nd of September, and after 22nd of September, the purchasing power has increased. So thus more machines can be deployed, and thus this GST rate cut means more mechanization in agricultural sector. Not only more mechanization, it also means more production, better quality of production, and low labor cost. So thus the same quantity of labor in agriculture in our country, availability of labor is also a challenge. Availability of land, availability of labor, these all are challenge. So now that limited labor can be deployed in a better way. What are the long-term benefits? The biggest benefit which I see from this is that small farmer, as I mentioned, small farmers are not capable of processing their produce. So they sell their produce to process house or middleman. So once they sell their produce to process house or middleman at nil rate, because this ITC chain breaks, because the crops are exempted from GST. I mean, agricultural produces are almost all agricultural produces are exempted from GST. So ITC chain breaks. Now what I can see that with this significant reduction in capex and operational cost, if any small farmer is able to set up a small process house, then in that case, that ITC chain will not break, and this significant increase in competitive reduction, because the GST, all this GST of agriculturalist or a farmer is paying on capex or operational cost, that he will be able to take credit of same, and thus the cost of production, cost of agriculture will significantly come down. So now, if they get into manufacturing, what are the benefit? Is there any change? So yes, they change, it boosts business, but most of the inputs used by them are taxed at 18%. Yes, yes. So this is not only for agriculture agriculturalist. This is also for pharma, nutra, all the sectors. So this is a common slide for all of them which are into manufacturing, medical equipment,
Sorry
pharma.
to cut in, Vikasji. Just a gentle reminder that we have to conclude the session by 6:45, including the Q&A part. So
Yeah, sure. Give me 5 minutes. I'll conclude in 5 minutes.
Okay, okay, great, sir.
Okay. Okay. So there are. I was going very fast for that reason only because we started late. So, anyways, so manufacturing sector में क्या है कि like pharma, all the products have came down to 5%, but their inputs those are still at 18%. Machineries, their machineries are still at 18%. So what about that? So this result in ITC accumulation. So with respect to raw material, the inverted duty refund option is already there. But yes, capex will be accumulation. So now pharma industry, pharma or nutraceutical who are not into export, for them it is going to be tough because government is pressurizing them that boss you'll have to pass on the GST rate cut to the consumer. But what about the ITC paid by them? So for this reason, a proper representation may be made to the government that capex or some relief is provided. The relief may be provided by bringing capex into the inverted tax refund, which government may not agree because this cannot be done only for pharma. So maybe government may come up with say any exemption for pharma based machineries, uh, machineries which are to be used by pharma manufacturers. Okay, nutraceutical manufacturers. I'm sorry, nutraceutical manufacturers. So now with the option of provisional refund, anyways, inverted refund also is fast, as I mentioned. One more thing, this those who are coming into inverted refund for the first time, what preparation they need to do, this is important. You can focus. See, manufacturing is a complex activity, so various goods are used. So possible that product taxable at both 5 and 18% rates. Now what I'm trying to say that if you are into nutraceutical, it is possible that some of the products are in 5% and some are into 18%. So you can't go into inverted tax structure refund for this 18%, the product which is already into 18%. But many of the raw materials may be common. So what precaution you have to do or what preparation you have to start doing, any of such client if you may have, or any other, this may happen in any other sector also. So what you may have to do is, like for example, machine manufacturer, not only nutraceutical, this may happen for machine manufacturer also. A machine manufacturer may not be necessarily manufacturing machines for pharma sector only. It may be manufacturing machine for nutra also, or it may be manufacturing machine for other sectors also. So for in that case, their product may be taxable at 5 and 18%. So they'll have to identify product wise inputs and prepare consumption reports. If not already there, they'll have to prepare or update their cost sheets or BOM, which will be required later on. And all the invoices, there are industries even today also who are not following PO process completely. So it would be better that if you are into inverted tax structure refund, you must book all the invoices related to goods through PO process only. And this is not my view. I'm telling this as per our experiences while facing disputes related to inverted tax refund. Now, what about dealers? Is there any
Uh,
change for dealers?
we
Yes,
have
ITC accumulation. Suppose you have purchased goods before 22nd of September and selling after 22nd of September, same goods on which tax rate has reduced, then your purchase is at higher rate and sell it as lower rate. What to do? What is the solution? Okay, option of refund under inverted duty structure. On this point, there are people whose view is that in this case, inverted tax refund will not be available. Refer section 64. There is no such restriction. You can certainly go for inverted tax refund, inverted duty structure refund in such cases. Now that too now with the option of provisional refund, which is faster. So yes, now agro-based sectors, I've just touched what are the agro-based sectors on which there may be some changes: vegetable and food processing units, pulses and cereals processing industry, uh, edible oil, biofuel, rice mills, dairy industry, sugar industry, textile industry, rubber industry, jute industry. So what is the impact? Impact we already discussed. More or less same impact is there on these industry also, on a maybe on a smaller scale, but the same impact is there and the treatment is also same. So largely on all the industry, what you'll have to focus that if the industry has came in the inverted tax structure for the first time, then the preparation I have told that will have to be done. And if there is any ITC reduction, if there is any GST exemption is provided, then ITC reversal will be there in the picture. And then whatever benefit you are getting from the GST, you'll have to pass on to your consumer. For pharma, I mentioned that if your client is in pharma nutraceutical, then you must make a representation to the government about the ITC accumulation, which I mentioned. Thank you, guys. If any question, please welcome.
Thank you so much, Vikas ji. Yes, Utkarsh bhai, I think you were.
So no questions. So you'll be taking the questions?
Yeah, we'll take the questions of first part so that gradually then Janak sir can take the second part over from here.
So we'll just see the chat box. Just give me a minute. Yes, Vikas ji. So first question is by Nishant bhai, that even if Section 18(4) is applied, then for insurance company, credit should be reversed on which goods? What are the inputs held in stock, inputs contained in semi-finished goods or finished goods held in stock for insurance company? So what will that term cover, which is given in Section 18(4)?
This appears to be a business kind. I mean, this depends on business to business. There may be some goods which is more a industry specific question. See, what I'm of view is that 18(4) is on at the first place is not applicable for insurance industry. And as far as question like what kind of goods can be there, uh, I think it is more like a business specific question.
Okay, sir. Okay. Next, next question is again by Nishanji that how will it be calculated since group insurance is still taxable? So whether 18(4) will apply or 17(2) will apply. Usually
That
when
is what
some
I
supplies
told.
are becoming exempt and some supplies are becoming taxable.
That is what I told. That 18(4) can't be applied. It will fall under 17 plus 42 43. So rule 40 to 43 में जो monthly reversal का जो formula है, that has to be followed. And at the end of the year, based on the annual turnover, final reversal can be done.
Okay. Okay.
I had handled GST assessment of one of insurance company last year. What I have seen, I can share with you what they were doing practically. उसमें क्या होता है कि जो रेशियो होता है टैक्सेबल और एग्जम्प्टेड का, वो बहुत वेरी करता है, बहुत यूनिफॉर्म नहीं रहता. सो वो क्या करते थे, वो एक्यूमुलेटेड रेशियो हर में डालते थे. एक्यूमुलेटेड रेशियो के हिसाब से आईटीसी रिवर्सल का फिगर हर महीने निकालते थे और अभी तक जितना रिवर्सल किया हुआ है उसको डिडक्ट करके बचा हुआ अमाउंट रिवर्स कर देते थे. दिस वाज अ गुड प्रैक्टिस आई फाउंड, which that's what I'm sharing.
Okay. Okay, sir. And sir, last question is by Shripada Hegdeji. And this is one issue which I also relate. Is in how many cases the provisional refund is processed even in case of exports. She has hardly seen it happening in Bangalore. And I have also practically seen very rare cases wherein this provisional refund of 90% is actually given by department.
सर क्या होता है, एक छोटा सा एग्जांपल मैं छोटा सा क्वेश्चन आपसे पूछता हूँ. जब टैक्स ऑफिसर आपको बोलता है कि ये टाइम बार्ड हो गया है तो आप प्लीज बैकडेट में रिसीव कर लीजिए, तो हम क्या करते हैं? हम कर लेते हैं ना. हम बोलते कौन पंगा लेगा. तो अगर हम कर लेते हैं और हम उनको क्वेश्चन नहीं करते कि मैं बैक डेट में क्यों रिसीव करूं, तो उनको भी नहीं पड़ी है ना. उनको मालूम है कि वो बैक डेट में देते हैं, वो ऑर्डर भी बैक डेट में पास करते हैं, हम एक्सेप्ट करते हैं. बाकी अदरवाइज इफ यू एक्चुअली फॉलो अप विद देम, तो दे आर, यहाँ गुजरात में तो हो रहे हैं हमारे क्लाइंट के, तो हम लोग हमें हमें उसका बेनिफिट मिल रहा है. इनफैक्ट इफ देर इज एनी डिले, द ऑफिसर एक्चुअली प्लीज बोल के हमें बोलता है कि सर प्लीज इसका इंटरेस्ट क्लेम मत कीजिएगा, सर प्लीज बैकडेट में ले लीजिए। खैर अब तो बैकडेट का स्कोप ही नहीं रहा, मतलब बिकॉज इट इज ऑल ऑन द जीएसटी पोर्टल, बट practically it is happening in my experience. Sorry, someone has written, if you can please continue in English. I am very sorry. Habitually, I was speaking in Hindi earlier also. Had I mean, it came to my mind earlier, I would not use Hindi. I'm very sorry, sir.
No issues, sir, no issues. So I think all the queries which were there in chat box has been done. So if any participant have any more queries, either they can type in the chat box or they can raise their hand and we will unmute them.
So even
So,
otherwise, if they can send the query on email also, that is also fine. We'll address that.
so I think that is a very, very generous offer by our speaker. So I think so if they have any queries which they want to share after the session, they can send on email as well. If they want to ask now, they can share in chat box or they can raise their hand.
I am writing my email in the chat box. The email ID is working. The website is down because I have closed my US business recently. So the website needs to be changed. That's why website is down. But don't worry, email ID is working.
Okay, okay, sir. So I think, sir, I think no other queries are there. I think you have taken the session in such a great detail that all the queries have been handled during the session only.
Thank you.
So,
So, yeah, I'll
yeah, I
just
would
give
like to
a
hand over to Utkarsh ji for the formal vote of thanks for the Vikas ji.
thank you, Moji. So, on behalf of everyone present here, I would like to extend our heartfelt gratitude to Vikas sir for sharing his invaluable insights with us, even in such a compressed, short time frame. We are sure that your inputs have added immense value to this entire gathering, to everybody who's been listening and gathering notes and all. I also wish to thank all the participant guests and on the organizing team, with whose collective presence this particular part event of Vikas sir was handled. Thank you, sir. Thank you so much. Moisa, should we move on to the next part?
Yes, so next session is by our esteemed Janak Wagani sir. The topic is banking, finance, and other services, other financial services. So I would like to invite Utkarsh ji for giving introduction of Janak Wagani sir. Over to you, Utkarsh bhai.
Thank you, Moji. Thank you. Hello, everyone. It is again my privilege to introduce one of our most distinguished speakers, Sri Janak Bhogani, sir. He's a practicing chartered accountant since 1985, much before I was born, with experience in indirect taxes, with expertise in indirect taxes. Sir is the founding partner of Messrs. BJUN Associates LLP, where he works alongside reputed professionals in direct and indirect taxation, including indirect taxation. Sir has also presented papers at various RSCs, authored books on sales tax and works contract tax, contributed to WIRC publications, and written extensively for leading tax journals, and regularly delivers lectures at seminars, conferences, and professional forums such as ours. Sir has also held prestigious positions such as the chairman of the Marat Chamber of Tax Consultants and national vice president and treasurer of AIFTP. And Sir is currently serving as the honorable consultant to various trade associations, and as well as he is the chairman of the Joint Workshop and History and Digitization Committee of GSTP. We welcome you, sir, and we await your valuable insights and inputs for the today's session. Over to you, sir.
Yeah, Namaskar. Thank you, Utkarsh, for nice introduction, which I don't deserve that much. Uh, I, uh, Jai Shri Krishna, Namaskar, and Jai GS to all, Jai GST to all of you. A very pleasant moment for us. After the introduction of the GST, many times we have seen the favorable amendments by the government. There was a complaint against the government for frequent and so many changes in the GST law. But friends, most of the amendments made in the GST law, except that retrospective amendment to Section 7, were at the instances of trade and industry only. Some of them were represented by we people at a various forum. And government, we feel that government is listening, maybe slow in action, but there have been a changes. And we were awaiting the tax reform, rate of the tax reduction, rates reduction, not the tax rate. And when I read the news that PMO is in action, then I thought, yes, there is going to be a very serious exercise by the government for reduction of the rate of tax in GST. It started with some tweeter by one of the minister, why we have a tax on the life insurance. And 1 year before the exercise was started, and now we have seen the result. Practically, there is no changes in rate of tax to the banking finance. There is no direct change in the rate of the tax. But of course, there is a change in rate of tax on insurance sector. That we as a consumer are the direct beneficiary of this change in the rate of tax. We all know that we have got the bundle of insurance policies. I have not prepared the PPT because we all are a practitioner and we have read the GST notification. So we know what is the text of the notification. So I'm just discussing some of the issues relating to this sector and much debate on this section 18.4. What is the scope of exempt supply? That I am going to cover that. That the insurance company, there are the life insurance and the general insurance. Two type of the insurance. Under the general insurance category, we have got healthcare insurance, which is popularly known as a Mediclaim, and other insurance include the accidental insurance also, and loss of theft and commercial insurance for the loss of stock, burglary insurance, personal insurance, and etc. etc. So the life insurance was subject to tax under the service tax. All the insurance were subject to service tax. It has been carried forward, brought forward in the GST in the same package. Now the amendment is being made to the notification issued under Section 11, providing exemption from the levy of the tax on the supply of services. And three entries are inserted: 36C capital, 36D capital, and 36E capital. And service of LIC business, service of health insurance business, and the reinsurance are provided for the exemption. I fail to understand the meaning of business. Why they have inserted the word business in this notification? There is no supply of service of a life insurance business to anybody. There is no healthcare insurance business. The supply of business is already exempted under other entry. And what is offered by the insurance company is no what? An insurance from the future risk. So that in case of a death, life insurance, in case of a death during the terms of the policy period, the sum of the insured amount would be given to the legal heir. And that's why jokingly we say that you never get the money on your life insurance unless you have gone into the endowment policy or money back policy. That under that policy, the premium is collected for the two component. One is for the sum of the money towards your investment, and sum of the money for the risk of the insurance of your life. So when the two components are there on a single prices, We had a debate under the earlier law, under the sales tax and other way law, that the tax can be collected only on the money which is received or receivable for the taxable event. Now, when the insurance premium is collected for the life insurance as well as for the investment, which is plowback, given back to the insurer with the profit, which is popularly called as the endowment policy. Then what is the price for the life insurance services? That should only be taxable, but it is not so. Entire premium collected has been subject to tax and nobody has raised the objection to that. Now look at the lottery and the online gaming. The matter is pending before the Supreme Court, where it is argued that entire money collected in a online gaming and in a lottery is not for the services or actionable claim. You know, we have got a judgment under the sales tax law in case of Sunrise Lotteries. Prior to that, H. Chandra 60 STC, where the lottery was held as a taxable in that Supreme Court judgment, then it was reversed by the larger bench of the Supreme Court, Sunrise Lotteries. That in case of issue of lottery, there are the two components. A contribution for the prize fund and a was part of the consideration for choosing action to to get a right to get the prizes when you are selected as a winner. And that component was considered as a tax actionable claim on which tax was sought to be levied. And therefore, under the sales tax law, they have designed a valuation mechanism. So every lottery ticket holder, the drawer, organizer were participating the prize money and some of the money for the right for to claim the winnings or prizes, and that amount was subject to tax under the sales tax law. So when we have got an insurance policy, we have got the term insurance policy where you don't get money back during your lifetime, during the policy period. At the end of the policy period, if you survive, then nothing is payable by the insurance. That is considered a whole life policy or term policy. And during the policy period, if something happens to you, then the insured amount is given back to the legal heir. That is the premium which should be taxable under the GST, not the amount for contribution to the investment part of the policy in case of endowment and money back policy. Anyway, now it was the past is past. Now the government has taken a wise decision, make it tax free. Now we have got a group insurance policy also offered by the insurance company. And surprisingly, they have said no exemptions to the group insurance policy. So the insurance policy on the life of the individual is only exempt. Then we have got the healthcare mediclaim properly known. Now, life insurance, when I say, is for endowment, money back, ULIP, whatever the name may be, entire policy premium is exempt. Then we have got a mediclaim that is also exempt. And they have defined the meaning of the group and the meaning of the other thing in that notification. Will not discuss much about that because that is covered in the FAQ in the release in the 56 and the 57 also. And IRDA has also issued a clarification on what is the scope of the exemption and etc. And we have seen the effect of this, that the insurance policy and insurance policy is being offered at a now a reduced rate to the person. Now, one of the topic in this method is about the application of Section 14 to the insurance policy. Now, friends, we know that how the insurance business is being carried on. The first, we will fill up the form, and that is a proposal for the insurance. That is not a contract of a policy. It is a proposal. So we fill up our details and select the period and the scheme and plan of the insurance policy, and we pay the premium. And then that is being scrutinized by the insurance company, and if it is accepted, then they issue us the policy. Section 14 provides that out of three, two should be happening prior to date of the change. Then the old law will apply to that. That is receipt of the money, supply of the services, and the issuance of the invoices. So when a premium is paid prior to 22nd September, form is filled. According to me, it is the advance payment, no insurance services supplied, and no bill is required to be raised, because it would be a receipt voucher, advance payment voucher. And as per Section 31, the invoice has to be issued when the proposal is accepted by the insurance company. At that time, when he accepts our proposal, at that time, my agreement to supply the services with the insurance company starts. So these two things, if happens after 22nd September, then according to me, the policy is exempt. GST is exempt on that transaction. Then there are renewal also. Of course, on the renewal also, it is clarified that if renewal happens after 22nd September, then it would be exempt. Now, practically on the banking sector, there is no direct change. And in the finance company also, there is no direct any change to the GST law. But because of reduction of rate of the tax on the other goods and services, there is a savings in the cost of the goods and services supplied by them, availed by them, rather, or not supplied but availed by them as an inward supply, as a consumer. So that would is a very minimum and marginal factor. And in the banking industry, rate of interest is governed by the RBI from time to time based on the repo rate. So we cannot expect from the banking industry and the credit card agency that since on your inward supply the rate of GST is reduced, so you pass on benefit to us. That is not possible and may not be covered under anti-profiteering also. Now the much debated topic about section 18.4. Now if we read section 18.4 minutely, which says where any registered person who has availed of input tax credit opts to pay tax under section 10, that is not covered us, where the goods or service or both supplied by him become wholly exempt. That is the debatable proposition, whether it talks about the other person or other goods or services. A person may be supplying more than one services or more than goods. Does it mean that to attract this provision, his entire goods or services should be exempt? Or if part of them is exempt, then whether 18.4 will apply or not? According to me, the exemption referred therein is with respect to the goods and services and not the other person himself. So if the goods is exempt, which you are supplying, there may be a taxable good, there may be a exempt goods, there may be exempt service, there may be a taxable services. then qua that exempt goods and exempt services, Section 18(4) will apply. That is my proposition. And earlier, under the sales tax law, we had a number of the cases in this respect based on the language of the provision. So there was a one Supreme Court decision on that aspect. I forgot the citation, but I still remember the ratio of that. There are four components of the taxable transaction: taxable person, taxable transaction, and taxable consideration. If any of them is exempt, then you are going into the bracket of the exemption. So that whatever the implication of a ITC set off relating to the exemption would apply. But that was their plea before the Supreme Court, and we have to apply that analogy to this Section 18(4). Anyway, in case of a service industry, the 18(4) provides for input held in the stock and in its capital goods and semi-finished goods or finished goods. So basically, this is with reference to the goods which are exempt and not the services. And in case of the service, there is nothing which are in this type of the insurance and banking. I'm not taking it as a whole, because in case of the works contract services, there may be a goods which are input for the providing the output services. I'm not talking to that thing. For these financial banking services, there are no input or capital goods which would become a part of Section 18(4), for which ITC is to be denied. But of course, Rule 42 and 43 will apply. And look at the ITC amount of this industry. In the banking, 50% straight away is being denied under Section 17(2) and 4. Straight away, 50% is gone. And what is their ITC? It is only with respect to the certain indirect expenses. And one of the direct expenses is of the insurance commission and financial brokerage and commission paid by the bank. But the amount of the commission compared to the percentage of the income, compared to the income part, is very, very nominal and minimum. In terms of the quantity, it may be into the lakhs, it may be into the crores. But when you look at the percentage of the income and the rate of the tax, 18%, it could be a fraction of that. I think Vikas ji has attended the assessment of the insurance company, and so he might be able to throw the light. Practically, I don't have any client of an insurance company, but as a consumer and as a student of the law, when a call was made to me, I applied my mind to this controversy. Friends, as a anti-profiteering law will certainly apply to all the rate reduction, and they have already announced that. So there is a one chat me that software is not a goods, so it is not a capital goods. So you need not to worry about that thing, because there is when this GST was introduced, at that time we were debating that there would be a diminution of a difference between goods and services. But unfortunately, because of its nature, the distinction between goods and services kept intact for the determination of place of supply, for determination of the valuation of the goods and services, and also for determination of the input tax credit and inverted duty structure refund. So we will have to keep this distinction in mind. Now, when we have got the services which are capitalized, can we say it is a capital goods? The answer is no. So the restrictions applicable to the capital goods will not apply to the services which are capitalized. So that also factor we have to keep in mind. Friends, I don't want to pull on the lecture, but there is a one indirect implications for the leasing company, which they are providing the leasing business of the car, motor car. Since the rate of tax on the motor car is reduced from 40 or 29 to 18%, so their requirement for financing the loan to the financing the motor car would be reduced. So earlier motor car was at 10 lakh rupees. Now it has become 9 lakh rupees. So the requirement for the allocation of finance for the financing the motor car would be reduced. So thereby they can cater more and more person for the purpose of financing the motor car and the truck and all that thing. So that is a indirect benefit to the finance and leasing industry. And the rate of tax on the leasing of the motor car would be 18%. Whether you claim ITC or not, it will be the 18%. You get the ITC also on the purchase of the motor car. When you sell the motor car, the rate would be the 18%. Then also in case of the insurance, where they repossess the damaged goods, if it is a motor car insurance, then the motor car, there is a salvage value. If the motor car is sold as a motor car, then the reduced rate of tax will apply to that motor car. So the salvage value of the goods would be reduced to the extent of the GST payable by them because of reduction in rate of the tax. Friends, that's all from my side on the banking, finance, and the insurance company. And I thank the CGPI that because of this lecture given to me, I was compelled to study this sector. And I hope that I have given justice to the topic. If there is any question, then I will try to make an attempt. But we had a Anand Desai in our group. Unfortunately, he could not. He didn't have a time, so I am being asked to give the lecture. And our Anand Desai, you know that he is representing the banking industry in the government. So next time, whenever we have got any topic relating to that, we can certainly take the benefit of the Anand Desai in that respect. Yes, thank you.
Thank you so much, sir. I think before your session, even I did not realize that there are so many nitty-gritties in these sectors because of these rate changes. But during your deliberation, I realized a lot of
Thank you.
new things. So, first question is by Sujata ji. She is asking whether there is a possibility of ITC relating to software that is capitalized in the books of accounts.
According to me, ITC would be available if it was a taxable supply. Here we are not discussing on that, whether ITC available or not. But in respect of inverted duty structure, the capital goods, wherever there is a capital goods is mentioned, not inverted duty structure, but in Rule 8, Section 18, the capital goods is mentioned for the reduction. So capital goods will never include the services which are capitalized. That is my point. So we have to make kept in mind the distinction between capital goods and capital services. And Sujata, I remember one of the tribunal decision which your office had argued. I think Lloyd Company something was there under the VAT Act, where there was a similar provision of the capital goods. Something was there. I don't remember that, but something was there. There was an argument on that point. But I'm very clear on that services which are capitalized can never be included in the capital goods. That is my point of argument. And the department is aware about this controversy. Yeah.
Thank you, sir. So next, Sujata ji is asking, could you please share the FAQs or guidelines which are issued by IRDA on the point which you discussed?
I will say because there was a 4th September IRDA guidelines was a FAQ was issued, but I don't have a readily available. Then I will find it and share it with on the group.
Okay, sir. Okay, you can share with anyone in the group or in the CGPI team, and they will further share it with the participants.
But we have seen the announcement by the insurance company for the reduction of the rate of the policy. At least they
Yeah.
are very honest.
Yes, I think market realities and competitions is a very big factor when it comes to these rate reductions.
Okay.
Okay. So if any other participant have any other question, they can either type in the chat box or they can raise their hand and we can unmute them and they can ask Janak sir face to face. So does anyone have any other questions?
Okay. I mean, don't force. We can close.
So I think all the questions have already been answered during the deliberation only.
Yeah, Vikas has done very well. I mean, I must compliment Vikas that his topic was very large. And there were a lot of things to discuss, even till today also.
Yes,
But
of
that
course.
we can keep it and reserve for our RRC.
So even I think the topic, because when we started doing these industry-wise topics on these rate changes, so every industry, when you start going into that industry, only after starting the studies, you realize how much changes are
Yeah,
actually there, how much issues are actually there in that industry because of these changes.
I mean, a few days before I was in the hospital, not in hospital for the medical treatment, but I was explaining them the implications of the changes in the rate of tax to their industry. So there were a lot of things. It took 3 hours to explain them the impact of the changes to be implemented by them. Because they were not knowing all these things, no? Because there were a lot of things to be done at the down the level.
Absolutely, sir, absolutely. So now I would like to hand over to Utkarsh ji for giving a formal vote of thanks. Over to you, Utkarsh bhai.
Thank you, Moji. So I believe it is my privilege to convey our collective gratitude at the close of today's program. So on behalf of everyone here, I would like to thank Shri Janak Pogani sir for enlightening us with his thoughts and experiences. And it was a wonderful experience to listen to your deliberation, sir. We are also equally grateful to the participants and all the people who have joined us and made this particular session meaningful. I would like to also appreciate the organizing team whose efforts ensured this smooth conduct of the event, especially Mohitji and Shravanji. So
Yes.
that's all.
So
Thank you, everyone. Thank you so much.
thank you. Thank you.
Thank
Thank
you
you,
so
sir.
much, everyone. So we have our next session on Saturday, day after tomorrow at same time, 5 p.m. to 7 p.m. So see you all at that time. Thank you.
Thank you, everyone.